Yes,
So,
ma'am, we can start now.
okay. So, good evening, friends. Welcome to another session on the IEPF, the Investor Awareness Program, which SIRC has been doing consistently for the past many years, once a month. And these programs are enabling programs to which is open to everyone, not only chartered accountants, to help them in awareness and updating their knowledge and help them to save up for some security in the future. I was just having a chat with our speaker, Mr. A.K. Narayanan, today, who has been very generous in accepting our invite and coming here to deliver his expertise on this subject. Most of us are risk averse. Most of us do not want to lose our hard-earned money. And, we also sometimes tend to be very reactive and emotional as far as investments are concerned, especially when you go into the equity market and, you kind of get carried away sometimes by your friends' advice or whatever you read, or, some of us tend to invest in a market which is going up and selling when the market is coming down. So your buy and sell calls are totally skewed on those days because we are following the market graph rather than, buying at downs and selling at lows. What we do is buying at highs and selling at lows and then end up burning our fingers. And this is where we have experts like CA Narayanan, who comes to help us to decipher the markets. How are we going to invest so that our future is also, like he just told a very, very relevant sentence. You have to make the money work for you. And once the money works for you, then you start getting a passive source of income. So your pressure to do the active incomes in the streams of your choice is also, you get a wider choice of working for yourself at your time and making use of your other resources. So today, sir is going to share us information about this. Before I hand over the platform to sir, I would like to give you a brief introduction of sir. He's a chartered accountant and a Bachelor of Economics from Madras University, with over 2 decades of industrial experience in corporate finance, top management, and he was lastly holding a position of CEO of a large leather group in Chennai. And he was a past president of the Tamil Nadu Investors Association and past president of a group of financial advisors for 3 years. He was also the publisher and editor of the Tamil Nadu Investors Association's Investor Digest for 15 years and has over 3 decades of experience in the capital market. And he's also the author of a book on how to invest right and prosper. Today, he is an investment coach and trainer, financial planner for individuals, trusts, HNIs, and corporates, and a trainer for investor education. And he's invited as a sought-after speaker for financial literacy programs and capital market seminars in schools, colleges, and professional institutes like ours and other forums. And he has addressed on the subject of latest developments in the capital market and financial literacy program. He specializes in training directors in the role of corporate governance and compliance and interpretation of balance sheet items. And he has served as a trustee or a member in investor protection funds, served as a member of the SEBI Investor Protection Fund and National Stock Exchange Investor Protection Fund and the Madras Stock Exchange. And he's also served on many committees constituted by SEBI and also the Primary Market Advisory Committee, the Corporate Governance Committees under Mr. Kumaramangalam Birla and N. Narayanasamy, and Takeover Committee and many other high-powered committees. He has addressed more than 900 financial literacy programs and the investor awareness programs across the country. And he's also a member of the LIC Zonal Advisory Board for South and has over 30 years of experience in the capital market and has done work on valuation also. So today, sir is going to tell us how to deal with the current emerging markets, how we are going to invest and deploy our resources and how to make the markets work for us intelligently. So thank you very much, sir, for accepting our invite. On behalf of SIRC and all the members here, we are very grateful to you for accepting our invite. Over to you, sir.
Good evening. Thank you, Mrs. Revati.
Yeah.
Raghunathan, for your good words. I really thank the SIRC and the chairman and the committee for inviting me and giving me an opportunity to share my thoughts on investing strategy for the current market scenario. This is always a much sought out topic for the simple reason that everybody wants to invest money and everybody wants to know how to build their portfolio and how to make things work. It is not a very difficult task for an individual, in my opinion, to invest money regularly. But what I have found is the people are not determined to stay invested and they are not ready to invest in a disciplined way. Many of the investors come to me and ask me, sir, what kind of return I'll get if I invest 2 lakhs? This is the first question they'll start. It is not like a bank where the interest rates are published in the bank branches or in the newspapers that you will get a definite return in the stock market. Neither returns are guaranteed nor it is assured. The regulator SEBI always says nobody can promise a return. So what is happening is you are investing in a product which may deliver, may not deliver, but at the end of the day, you will know whether the asset class is right or not. So the fear is always there in the minds of the investor, whether I'm doing the right thing or wrong thing. They want somebody to endorse that what they are doing is correct. I've seen a lot of people saying that, sir, I have invested money during Arshad Mehta time and I lost some money. Again, they'll say we made some investment during Ketan Parekh time, but I lost some money. It's all okay. I'm addressing a group of auditors today, chartered accountants. I'm sure that each one of you must be coming across many of your clients' investment portfolio. Some are really successful and some are not. What is the difference? We need to understand that first. Is investment a problem, or the investment can be made with certain assumptions? So I want to talk something about the financial planning and asset classes for sure. Today, without a plan of action, without budgeting, if you're going to do certain things, it will not work to your advantage. I need to plan my things properly. Even to come to the institute in the evening at 5 o'clock, one has to plan what time we leave, how we are going to leave, how long it will take. All these things we have to take into account. So why we are not able to plan our affairs well? That's the question I ask. We talk about various habits. I say financial habit is the golden rule for you. If only you can inculcate the habit to the youngsters, young children, when they are in school and college, I can assure you that they will do extremely well when they grow up. Today, unfortunately, handling money becomes a problem for youngsters for the simple reason they earn a lot of money and same time they have the avenues to spend money. There is nobody to tell them, please save money here, save money there, and you will make your money. They think that shortcut to success is by investing in short-term products and get money, get returns. No wonder cryptocurrency became popular in the short time. Because everybody wants to become quick rich. This will never happen. So if you want to earn money, definitely you need to plan your things. No one gets a sudden rise, not even the sun. It takes time to rise to the peak of success. Just keep your efforts going and be positive. It's a very, very important. If somebody comes and asks me, sir, will you give 24% return? I'll always say, you will never get 24% return. If you are getting 12% return on a consistent basis over a period of 10 years time, you have done wonders. But then people are not happy. They say, no, sir, somebody told me 25% is possible in stock market. This is how people are getting misled. There are a lot of people giving you unsolicited advice. I will call this unsolicited advice. You will be going the right track. That person will come and tell you, sir, you are not doing the right thing. Please change this portfolio, change these stocks, do something better. If you're going to listen to everybody and anybody, you are going to be the loser. Again, I'll come back to the budget and keeping the expenses in check, because unless I have saving, I cannot invest money. We are talking about saving and investing. We are not talking about borrowing and investing. A lot of people ask me, sir, if you say 12% return you can get, and if State Bank of India is giving me at 6% or 7% loan, can I borrow and invest in the stock market? I will say no, because once you start borrowing money, it means you are start doing business. Then you become a business person. You can borrow for any purpose. You can borrow for your buying a car, buying a house, and for investing. You can do whatever you want. So in nutshell, I will say, earn, save, invest. These three you have to follow. Then the question comes, how much I should save? When I go to the college, they ask me, sir, how much I should save, sir? The first and foremost, when you start getting your salary, the first salary I'm talking about, you should determine to save 30% of your salary. I'm getting only 30,000, sir. How will I save 30%? Yes, you have to save money. If you are able to save 30%, then you can retire early. The question comes, can I invest? Can I save? Yes, you can. What is saving? You are only postponing the consumption. If I give you 10,000 rupees, you go to the mall, spend the money, go to the theater, spend the money, then finally come back and say, I've spent the money. Not bad. If you have money, you can save, spend. But in the initial stages of your career, if only you save 30% of your income, when there is no liability, no responsibility, then you do wonders. Keeping an emergency fund which can make you avoid borrowing to an extent. During the COVID time, I have seen a lot of people struggle. They didn't know where to go for money. Many did not even have a health policy, insurance policy. So they'll say, sir, how to go about? So I say, create an emergency fund. The question is, how much to create, where to create, and how to deposit the money. Emergency fund should be made available to you within 24 hours. So I can only put it in a bank deposit, or I can put it in a liquid fund in a mutual fund. What is the amount? Maybe 4 or 5 months expenses. If my monthly expense is 25,000, I create an emergency fund for about 1.5 lakhs. What do? Just take a deposit and keep 1.5 lakhs, or put it in a liquid fund which will give you 4-5%. Sir, I may not have any emergency for the next 1 year, 2 years, but I'll get only 4%. Doesn't matter. The objective of emergency fund, anytime you need the money, you have to pull it out. The return is not a criteria for putting money in fixed deposits or liquid fund. The criteria is you need to get your capital within 24 hours. So that you need not go and borrow with somebody. Then comes. So emergency fund is a must for each one of you here. If you have, fine. If you don't have, make sure that is not touched by anyone. Efficiently managing debt. The debt is a very, very strong word. Whether it individual, corporates, country as a whole, debt is not a great word. Today, everybody says, I am indebted to you. I have borrowed money. I have got housing loan going. I got a car loan going. I got mobile phone going. My credit card loans are going. Is it a great thing to say all this? If you don't lend your money, don't borrow money. That should be the principle. Accepting sometimes when I decide to buy a house, I need to borrow money. Doesn't matter. But don't borrow for mobile phones or laptops. Make your saving work for you. That is the very, very crucial thing. You need to save money and it should work for you. How much it works? Today the inflation is 6%, 6.5%. Your savings rate of interest should be more than 6.5%, 7%, so that at least it beats the inflation. If you're getting 3% return against inflation of 6%, that means you're eating your capital. Invest in the right financial products. A lot of questions come to me. Sir, should I put money in land? Should I buy gold? Should I buy in the equity? All these things. That's why I say we have 4 asset classes: fixed income, gold, real estate, and equity. There are no other asset classes available for you today. So you have to look at one of the asset classes and invest. If somebody comes and tells you, sir, can I put money in some other asset class? Nothing is available for you across the globe. What is fixed income? You're all very, very familiar with the bank deposits, PF, PPFL, whatever it is. Gold, everybody knows. Real estate, we are masters. Equity, very, very poor. We don't understand. We don't want to understand. And we think it is risky. I'll concentrate on each of the asset classes, but little more into equity than other asset classes. Because nothing I can say about fixed income, because everybody has got a bank account, deposits, everything fine. Let it go. 6%, 6.5%. State Bank is offering me 6% today, just covering my inflation. Can I put 10 lakhs into State Bank of India for 10 years? Certainly not. Fixed deposit is okay for 2-3 years, but you can't put for 10 years, 20 years and all that and say, I am a very, very safe player. Not a good thing, because inflation will eat you away. Gold, everybody loves to buy gold. Whole of T Nagar is full of gold shops. Great. Because we feel in times of emergency, during uncertain period, gold helps us. Yes, correct. But we are only gold accumulators. Are we selling gold anytime? No. We keep on accumulating, put it in the locker. The other day, one gentleman came and told me, I'm a senior citizen, sir. I don't have money. I'm struggling because my pension is only 10, 12,000 rupees. I don't know how to go about. His son is living abroad. So he says, what to do? So I asked him, what are the assets you're having? He said, I got about 200 sovereigns of gold, the locker, bought long time back. So I asked him, what for you kept it there? And he said, in times of uncertain period, in times of emergency, I use it. Are you going to use it? I asked him. He said, I may pledge it. I may take some loan. I said, today you are not having money. This is called emergency period. Why don't you sell it? No, sir, if I sell it, I will not buy back. Why should you buy back? Sell it. At least some portion of it. 20 sovereigns, you sell it. 30 sovereigns, you sell it. For whom you are saving the money? So you must know how to utilize the idle assets. People don't understand what is idle assets and the assets which we are using. Everybody thinks gold means we should not sell it at all. It's a wrong policy. Government of India has brought in paper gold today. Why? Because the imports have become too much. The precious foreign currency is going out. So government felt they must encourage paper. You can buy sovereign gold bond. It gives you 2.5% rate of interest. Where else you will get that? If you hold it for 8 years, no capital gain. They are ready to pay you back the gold price at the end of the term. Government of India and RBI is assuring you the return. But still we want physical gold and keep it in the locker. Real estate, less I talk, it's better because everybody loves to have one house, second house, third house, and the land near Dindivanam or Madurai. For what? Because it will appreciate in 10 years, 30 years, 50 years. Nothing wrong. None of the asset classes are bad. You must have a pie in every asset class. But in my opinion, one good house to live is more than enough. Gold as a consumption, please have it. If you want to invest money in gold, put it in the paper gold. Real estate, one good house is more than enough. Don't look at second house. What are you going to do with the second house? Give it for rent? You will get 3% return as rental yield. So it's not a great idea. Equity is a must for wealth creation. You want to retire peacefully, start investing in equity or equity mutual fund the day you join the company. When I talk to the youngsters, I always tell them, please invest money in equity mutual fund to start with. Don't bother about anything for the next 10, 20 years. That's how you should create wealth. Why? Because inflation will kill you today. You're having 1 lakh today, it will become 9,000 rupees in 2060. Sir, 6% inflation. I don't know whether it is 6 or 3 or 2 or 1 or 5. We don't know. Today, UK reports 10% inflation, unheard of. USA reports 8% inflation, unheard of. India is better, 6.5%, 6%. And RBI is determined to bring it down to 4%. I'm not saying that it will go to 6 or 5. We are going to see 4% also, but time will only tell. The idea of projecting the inflation is, if you don't understand inflation, you are not going to create wealth. The other day, somebody came and told me, I have invested 10 lakhs of rupees in State Bank of India. He came from down south, I don't know, Kumbakonam or Tanjore. He said, I have invested 10 lakhs, sir, in 2012 years. It has become 14 lakhs, sir. I said, 14 lakhs you have made, 4 lakhs you have got the income out of 10 lakhs investment for 12 years. I said, same 2010, if you had invested in the Nifty or Sensex, today it would have gone 4 times. See, the idea is fixed deposits are good for 3 years, 4 years, not more than that. But equity market is good for 5 years to 10 years and not for 1 year, 2 years, and 3 years. This difference you should know. Equity is good for 10 years. Fixed deposit is not good for 10 years. Fixed deposit is good for 1 year, 2 years, 3 years. Stock market is not good for 1 or 2, 3 years. That difference you must understand. What is the interest? What were we talking about? 1989, the interest rate was 16%. 1999, it became 13. 2009, it became 10. 1906 to 2029, what will become? I don't know. I don't know whether it will become 3 or 2 or 0 or whatever it is. But the direction is very, very clear to me. India is a developing nation right now. We are doing phenomenally well as compared to many other countries in the world. Do you know Indian GDP is the highest in the world? Maybe Indonesia is coming closer. China has dropped out. We have become the 5th largest nation in the world. We have beaten UK. We should be proud about many things. We can say a lot of things which are not required, but we must appreciate what are we up to. If only we are able to devote our time properly and devote towards our methodology of saving and investing, we can do wonders. But then we keep questioning certain things. This interest rate and inflation are related. In 2022, if inflation is 6, your interest will be 6.5 or 7. Maybe we are picking out the inflation by March 23. After that, you will see the rates coming down. Please understand and appreciate that interest will never go back to 10 or 13 in your lifetime hereafter. Yes, we all enjoyed, but that time the inflation was 13, 14%. So PPF was giving me 12%. But can they give now? No, they're giving me 7.15%. So the objective of telling you interest and inflation is that we need to look for product which can beat the inflation. If you don't find a way to make money while you sleep, you'll work until you die. You are all aware of Warren Buffett. He used to be the second largest, richest person in the world. Today, maybe in the top 5, he'll be there. He has made his money by investing in the stock market. His only regret is, he said, I started investing late in the market. He's about 91 years old today. Even today, he invests. All his investments are in equity market. He doesn't have fixed deposits. He owns only one real estate, one house to live, and one car which he drives. He says, I started investing only at the age of 14, and I regret. What is his specialty? He invests for life. He doesn't trade. He doesn't do jugglery of portfolio every day. If you find something good, buy it and forget it. But we are not like that. You buy today a company, Bata, tomorrow you go to Reliance. Somebody in the bus, they will say, no, sir, Asian Paint will do better. You go to the office and change it. We are very, very casual in our approach. We don't have the wherewithal to understand it. We don't have a proper advisory method where we hear somebody. We don't even have a time. I remember one gentleman called me for a discussion of investing about 25 lakhs. When I went to his office, he was so busy. He was having 4 or 5 people. In between, he asked me, Narayan, can I suggest some schemes where I can invest? So by the time I started looking at my papers and start telling him, so many calls came, so many discussions were going on. Finally, I found his concentration he was lacking. So I said, sir, I'll come when you're free. He said, no, I will always be like this. He took some notes from me, but he never came back to me because I know that he will have too many people to support him, too many people to help him out. Nothing wrong because he's concentrating earning money, but he doesn't have the time to find a way to invest. Nothing wrong, but this is how people are. This is a very, very important topic for chartered accountants. I'm sure you must have undergone a lot of people coming to you and saying that I've invested in some chit fund, sir. Money is not coming back. What do I do? Regulation is very, very important. I always tell one word. If you're investing in capital market, SEBI takes care of it. Securities Exchange Board of India takes care. If I'm buying some insurance products, IRDA takes care of that. If I'm investing in pension products, PFRDA takes care of that. If I'm going to invest in unlisted companies, then Ministry of Corporate Affairs takes care of that. But in the roadside, if somebody, my neighbor starts a chit fund and says, please put 20,000 rupees a month, I will manage it, and give it to him, and suddenly he disappears, what will he do? You can only go to a police station. I was very pleasantly surprised when I heard that not very far from Chennai, in Kanjipuram and Vellore, 2 people were managing a big amount of money, offering attractive returns, doubling the money in 3 months, 6 months, 1 year. And people were putting money left and right. I asked them, I asked somebody, have you invested money with them? They said, yes, sir. We have invested some 5 lakhs. I have invested 20 lakhs. One person came and told me that I want to withdraw 25 lakhs from mutual fund. I said, why are you doing it? Are you having any expense? He said, no, sir. I need for some money, something. He didn't tell me fully. Then later on, his wife came and told me he invested in this scheme in Velur, 25 lakhs. I asked him for why he had done this. He said, this mutual fund was giving 12%, sir. This man was ready to give me 30% return. Then I asked him, he's an unregulated product. He said, what do I care? As long as I get a return, fine. But now, unfortunately, those two people are behind the bar and money is lost. 25 lakhs is gone. So I asked him, what are you going to do now? So he said, no, sir, he collected 15,000 crore. So something government will do. I said, is it a consolation for you that 15,000 crore he has collected, which is unregulated? Are you sure you're going to get back money? You may get 50 paise per lakh. You may get about 5,000 rupees, I said. That too after 10 years. We are not learning from the mistakes we have made in the past. In 92, 93, so many people were cheating investors in Chennai. We are having a lot of chit fund schemes. We had a lot of car scheme, goat scheme, so many schemes. But we are not learning. It is very, very unfortunate. But when I tell them to put it in a mutual fund, they'll say it's very, very risky, sir. But this chap has put 25 lakhs there and now lost the money. You will not lose capital in any of these regulated schemes that easily. Recently, about a fortnight back, one husband and wife came and met me for investment advice. They wanted to invest some money. They have come 1 year ago. I suggested some schemes and mutual fund, which because they are young, in the sense between 30 and 35.
So sorry to interrupt.
Yeah.
So we are in first page of slide only. Is it on the first page or else are we navigating the slides?
Oh, you're in the first slide?
Yes, it seems to be screen sharing has passed actually. Can you stop and reshare it again?
1 minute. Sorry. 1 minute.
Yeah. Can you unmute yourself, sir? Can you unmute yourself? Yeah. Now I can see the physical gold versus paper gold page. And can you move to next slide, sir?
1 minute.
Yeah.
You could see that.
We can see now agenda and other stuff. Yeah.
Oh, you're not
you can
seeing.
move to the slide where you're doing, so maybe we can share the slide later to the audience.
No, you're seeing this?
Yeah, I can see, son. I can see now. Before that, it was in the first page itself. Now only it's moving. Actually.
Okay.
So can you share it again? So now it's screen sharing stopped. Now it's no one gets a sudden rise page.
Okay.
It's not that you need to keep it in slideshow mode. You need to either right now it's showing in a presenter view actually. Sorry.
PPT.
You can keep it in normal mode itself. It's a little bit what we call. You need to have a presenter view.
Is okay? You're able to see this?
Yes, sir. We can see.
Okay. Fine.
Thank you.
So this interest rate, we have seen this. I think I explained to you also how the interest rates are falling from 16% in 1989 to 2019. So this I think I explained to you. And Warren Buffett, as I said, is a legendary investor who invested money from the age of 14. He was second richest man in the world, and now he's in the top 5. And this is a very important thing, as I said, this is what I was explaining. Please don't invest money in unregulated scheme. This is where I said that when husband and wife came and met me, they were having a very good job in an IT company. 1 year back, they wanted advice. I gave them, but they didn't invest. Now again, they came and said, I want to invest. So I said, invest some money. They showed me their passbook. I was really surprised. They had almost 1 crore in the savings bank account. I said, why are you keeping so much of money? They said, we didn't know where to put money, so I kept it. Then they shared all the investments, whatever they made. I suggested few things. But the best part was they had invested some money in an unknown, unregulated fund, maybe 15, 16 lakhs. So I asked her how you invested the money. Then she told me that her sister or brother or somebody recommended them. But now she feels that money will come, but it may not immediately come. But she was concerned when I said, put the money in a mutual fund. I said, you have put money in an unregulated scheme. You are not bothered at all. But you are worried about the scheme which I am recommending, which is there for the last 20 years. But that's how people are. Where you have to be afraid of, you're not afraid of. But where you need to be careful, you don't pay attention. But then you are putting money anywhere and everywhere. A lot of fear psychosis going on as far as stock market is coming. Please don't worry about it. Mutual funds are well regulated, very transparent. The disclosure standards are very good, and it is cost-effective product. And it has delivered 10-12% return on a longer duration. Many people ask me, sir, will it give 12% all the time? It will not give 12% all the time. It is not a linear one. This year it may give 30%. Next year it may give minus 5%. Then it may give you 20%, then minus 2%. But if you take the average of 6 years, it will give you 12%. That's the beauty of the product. But please go for regulated scheme. If somebody comes and tells you, I please invest money, whether it is an uncle or neighbor or classmate or anybody, refrain from taking out your checkbook. Today, a lot of people say, sir, this KYC procedure with SEBI is too much. So this person is ready to take cash. So I'm giving him without any KYC. Is it a proud thing to do it? You can never do things like that. You have to pay attention to all this. Have a KYC done. Without PAN, you can't do anything today in the market. So be very wary of all these things. So this is very important thing. Then the question comes on unregulated. A lot of people ask me, sir, is 20% return normal, sir? I always tell them, how 20% can be normal? No, sir, this one person near my house is offering 20%. It's an unsecured loan. You will get interest for first month. After that, you will not get anything back. This is what happened in that Vellore and Kanchipuram area. You might have read in the newspaper that one of the actors got duped completely. But we are not learning from our mistakes. We want to invest only in things which we feel are attractive. We are thinking it's attractive. But products are attractive today. The bank deposits regulated by RBI, capital market regulated by SEBI, insurance products regulated by IRDA, and pension products regulated by PFRDA. They're all very, very good. You need not worry at all. They cannot take your money and run away. There can be market risks. So understand the two methods of risk. One is market risk. The other one is your, risk of company itself getting dissolved. A lot of people ask me a question whether gold is the best asset class. In India, yes. Whatever I say, nobody is going to listen to me. But in international market, gold prices are only falling, accepting that now the Russian war has helped you. and your US dollar is going up, so little bit straight. Otherwise, it's an unproductive asset as far as investment is concerned. You want to wear gold jewelry? Yes, buy it. Whether it is for 50 lakhs or 1 crore or 5 crore, don't hesitate. Whatever may be your status, please wear it. For consumption, I have no issue. But when it comes to investment in gold, only go for paper gold. Understand the difference. In your house, somebody says, no, I want to invest for 10 years, gold. Let me go to some jewelry shop in T Nagar and buy it. Don't do that. If it is for 10 years, it is better to put the money in a paper gold, get some return, sell it after 10 years and buy the gold, real gold after 10 years. Because the design changes, you lose money on wastages and a lot of things are there. So be careful about that. Gold is a good asset class. Maybe 5-10% of your overall portfolio, you can have gold. If you have a portfolio of 25 lakhs, maybe 2.5 lakhs, 3 lakhs, you can keep it as investment. Not more than that. 10% is the ideal choice. A lot of people ask me whether physical gold is better or sovereign gold bond is better. Sovereign gold bond is a great one. 8 years you hold it. There is no capital gain, no GST. Liquidity is low, of course. Interest is 2.5%. So please look at sovereign gold bond. Paper gold, of course, you have digital gold, gold ETF, gold mutual fund, sovereign gold bond. Even gold mutual funds are good. Gold ETFs are good. Gold ETF, you need to have a demat account. Digital gold, you can buy it in a shop also. So all these things you must know. Paper gold means there are 4 varieties. So all these things should be known to you very well. So all these things are important. As we evolve, we have to learn things. Many people ask me a question whether only the old method of buying gold is still hold good. Not anymore. You need to look at beyond physical gold. There is no need to buy physical gold. Please encash your gold wherever not required. I am not saying go and sell en masse. Just not required, get rid of that. The more we talk, it's better for insurance because people think that insurance means the great investment. Unfortunately, it is not the case. When I go to an IT company, I tell them, please take an insurance policy immediately. Then everybody says, sir, I have already taken an insurance policy, sir. Where have you taken? How much premium you are paying? When I ask them, they say, sir, I have taken a money back policy. I have taken a ULIP policy. I have taken an endowment policy. I was only looking for one word, term policy. It never comes. So they asked me, sir, what is term policy, sir? Why should I take term policy? Term policy means it's like your 2-wheeler and 4-wheeler policy, insurance policy. For a 25-year-old boy or a girl, you take for 1 crore term policy, you have to pay about 5,000-6,000 a year as the insurance premium, maybe 10,000 rupees. For 10,000 rupees, you are covering 1 crore. So I asked these people, how much you are paying? No, sir, I am paying 1.5 lakhs, sir. Another person came and said, no, sir, I am paying 2.5 lakhs. So that I may, my ATC deduction is also covered. Is that the purpose of insurance? To cover ATC straight away? Your objective of insurance is for protection. In case something happens to me, my family gets something back. That's the purpose of insurance. The purpose of insurance is for protection. Why I take a 4-wheeler insurance, 2-wheeler insurance? Because in case of some problem of theft, accident, fire, whatever, anything, I get back money from insurance company. It is not that wantedly I will lose my car, but in case somebody takes it away, rob it away, I get back some money. I have a mental peace, my car is insured. Same way, term policy covers. So the question comes, sir, how much insurance I should take, sir? one of the recent seminars, they asked me, how much insurance, sir, I should cover? I asked that boy, what is your salary? He was saying, I'm having a salary of 1 lakh per month. That means your annual salary is 12 lakhs. I normally say 10 times of your CTC, you can take a policy, 1 crore. 12 lakhs into 10 times, 8 times, 1 crore. He said, how much, sir? 1 crore is a lot of money. Who will give me policy? I said, term policy is possible. There is no problem for you because you are only 26 years old and 1 crore you can cover by paying less than 10,000 rupees. He was pleasantly surprised because somebody had told him that it's better to buy a good policy for about 5 lakhs per year premium, payable quarterly. I said, I cannot blame anybody. Everybody has got an objective. I may be selling many products, doesn't matter, but you should know what you want. Do you know what you want? I go to supermarket. I should know what I want. I cannot go inside the supermarket and start buying whatever I see. So I must be clear what I have to purchase. So insurance I want for protection. I want to take a term policy. I want to cover 10 times of my CTC. And I will pay a premium equivalent of that, 10,000 rupees. Cheap and best policy available. I was very, very happy. And you will be surprised. The entire office, they took a term policy. They were very, very thankful for educating them. Why I'm saying this is, nobody tells you term policy is good. Because we think insurance is a great investment idea which will create wealth. I don't know. If you want to create wealth, go to mutual fund. If you want to protect yourself, go to insurance company. You must know where to go for what. I cannot go to a Chinese hotel and ask for idli and dosa. It's not possible. What is possible, only you should do it. But if he says, I'll also give you idli, you have to compromise the quality. So always think that insurance is for protection. I will take term policy and I will cover 10 times of my CTC. That's all you should know. If you're going to be clear about these three, your uncle who is an agent, your neighbor who is an agent, your cousin who is an agent will not trouble you too much. Still they'll come to you, but they will not trouble you too much. But today what is happening is everybody wants to bombard you because you started earning money. No harm. They are looking after your welfare. But if you know that I want only this, then probably they'll be also a little cautious. Health insurance, absolutely a must. The COVID time taught us that health insurance really, people who are not having, they were sufferers. Please take it. Insurance, you are all auditors and chartered accountants. You know the exemptions we get. You're covering not only yourself, your family members, your children, your parents, everybody. You need to cover everybody in the health insurance. It is an investment. Don't compromise. Whether it is 5 lakhs is enough, 10 lakhs is enough, it depends on your ability. I will say, take a good health insurance policy and then buy a top-up cover. Now top-up covers are available. You have a base policy for 10 lakhs, then another 10 lakhs top-up cover. That means in case of emergency, the top-up cover will help you. So you'll have 10 plus 10, 20 lakhs. Life insurance, don't take it for youngsters. It is meant for people who are earning members. Insurance is meant for earning members. Because if your life is a threat, something happens, the family should not come to the room. I have seen a lot of people saying, I've taken policy for my youngest son who is 3 years old. What is the purpose? So we must understand to whom we should take a policy. If you don't know the insurance products well, you must consult somebody and take it properly. So it's a very important topic. And insurance never gives you great return. Understand that. 5.5% maximum it can give you return, which cannot beat the inflation. The objective of insurance is only protection. But I will never blame the sellers because their job is to sell products, push products. But it is up to you to understand what you want. If you don't know what you want, then you will end up buying things which are not required for you. That's what is happening today. Have a good sense and buy after lot of deliberation and discussion. No harm in it. So very important topic, insurance. So don't forget to, to pay attention to this. Now coming to the equity part. See, we have covered all the four. Fixed income is a very, very important one. Everybody invests money in fixed deposit, banks, post office, PF, PPF, and whatnot, wherever bonds and whatever. They are all fixed income means you get fixed return. It's absolutely required. All over the world, people deposit money there because they feel it is safer. Not only in India, everywhere. And we are not strangers to it. So I'm very happy that people are putting money in these kind of products, which are very, very useful. The second, what we saw was gold. The gold, very, very important because in the gold, bifurcate into two portions. You have consumption and investment. I want to consume, no problem, buy any quantity, bangle, chain, your necklace, anything. But when in investment, go to paper. Third, real estate. Buy one good house for your living. The other day, when a youngster came and told me, sir, I bought a good flat in OMR Road, sir. I was 25 years. I borrowed 60 lakhs from bank. I'm paying EMI. Now I'm transferred to Pune. What do I do with the house? He said, who asked you to buy at 25 years? No, sir, instead of paying 10,000 rupees rent, somebody told me it's better to pay EMI. Is this a way to buy a real estate? I asked him. He said, I didn't know, sir. Now I find it difficult because there's nobody wanted to take the house for 50,000 rent. But my EMI is coming more than that. As an auditor, we would have seen this. Many houses are kept under lock and key. So what do we do? Don't buy real estate before you are attaining 35 years. That is the first thing. It is not like buying insurance at 25. Not investing in 25 in mutual fund. Both are required. But real estate, you should start after 35 years. Why? Because at 35 years, you will know more or less where you're going to settle down. Maybe in Bangalore, maybe in Chennai, in Pune. Buy a house nearer your office space or a place where the schools are. You would have settled down in life. So don't buy a house at 25 years and suffer. First 10 years, don't think it's a waste of money to pay rent. Just paying rent, nothing wrong. Now comes the equity part. Like I said, only 4 asset classes and one good house to live is more than enough. Unless you are a multi-millionaire, if you are having 100 crores, 25 crores, then you buy the second house. But if you are going to earn money through salary, absolutely second house is not required for you. I'm sure you would have experienced. People say, sir, I get some rent and all. What rental yield? 3%, 4%, 3.5%. Is that the way to do it? The property tax and this, that. Very difficult. So how do I build my corpus, sir? I want to retire early. This is the question many people ask me. I say, go to equity. And immediately they say, sir, equity market is risky, sir. You are only saying equity market is very, very risky. So I ask them, what do you know about equity? Then they say, sir, equity market goes up and down. Whenever there is a war, it crashes. Whenever there is election, it crashes. Whenever there is a change of prime minister, it crashes. Yes, that's a function of the market. So what do I do, sir? Nothing you should do. Invest regularly in a disciplined way, in a systematic way. What to buy? That's the question. Mutual funds are the best. Today you're having direct and regular methods. If you are savvy investor, you can go direct. If you want help, go through regular, no problem. On a long-term SIPs, direct is okay. But if you want to have hand holding by somebody, then take the regular. First few years, somebody has to hand hold you. After that, you can take whatever methodology. Sir, are you sure that I'll get appreciation? That's a question one boy put to me. I said, I cannot assure you, but I can tell you one thing. The index, that is Bombay Stock Exchange, when it started in the year 1979, it started with 100. What is today? Today it is close to 60,000. What does it mean? He asked me. I said, 100 becoming 60,000 means it has grown 600 times. In how many years? 43 years. 43 years, it has grown 600 times, giving a consistent return of 16%. 16. But we are questioning. Stock market is like Sachin Tendulkar. He has proven. There is no need for him to again bat and prove that he is a great batsman. He's a batsman of highest caliber. But the market is also like that. It has proved. Sir, now that's all past, sir. 100 has become 60,000, sir. Are you sure that 60 will become 1 lakh? I am not predictor. I am not an astrologer. But I can tell you for sure, the Indian market is bound to go up for two reasons. One, we are one of the fastest growing countries in the world. We have the best of the legal system available. We have good accountants. We are having maximum English speaking people for work. We are very, very strong in IT. Our qualities are improving day by day. Companies are well governed. The profits from banks or corporates are becoming better and better. What more you want? To go 1 lakh? So it tells me that over a period of time, maybe 5 years, 10 years, I don't know, but this will grow. He was convinced. He said, then what do I do? Start putting some money every month in a good mutual fund. Even an index fund is okay, good enough. From 60,000 to 1 lakh, you will get money. Then he asked me, sir, 2010, if somebody had invested 10 lakhs, what would have been the return today in the index? Same example which I told you. Somebody invests 10 lakhs in State Bank, it is becoming 14 lakhs in 12 years, 2022. 2010, he has invested in State Bank 10 lakhs. In 2022, he gets back 14 lakhs. How much he'll get in Sensex or Nifty? I put 10 lakhs in 2010, I get back 40 lakhs. He said, how, sir? That's the return it has delivered. What more you want? It's a proven product, proved product. But we are worried. The regulation is very, very tough. No, sir, yesterday I bought a share for 100 rupees, it become 90. Where can I get the money back? You will not get back. The market movement, nobody will guarantee you. But if the broker you give 5 lakhs and tomorrow it closes the shop, you can go to SEBI and take the money. Because investor protection fund is there. We should not mix up two things. So don't think that fixed deposits alone can save us. Equity can save us. Capital appreciation. There are two ways you can make money in equity. One, regular dividends. I buy some share of Infosys, I get dividend, 2 dividends in a year, and appreciation. 1,000 can become 1,200. 1,000 can become 1,500. In the year 1995, when Infosys came for IPO in Indian market at 95 rupees, there were no takers. There were no takers. The issue was undersubscribed. Ultimately, UTA and somebody else saved the issue. People who put 100 shares, 9,500 rupees. Today, they're all sitting 4 crores. Nothing they have done apart from dividends. They're all crorepati's. TCS, same way. Asian Paints, same way. But if I'm going to buy Kingfisher, you're going to be the loser. Kingfisher, yes, they have lost money. The promoters somehow or other could not manage it. So never buy a share if they don't have profitability. I need not tell this to an auditor. You're all experts in your own way. If there are no profits, the market cannot go up. If there is no positive cash flow, the company shares is worthless. That is why we are all looking at cash flow. If cash flow is good, you are paying salary, you are paying suppliers on time, you are paying the regular taxes. But if cash flow is negative, we are in trouble. So it becomes very, very easy for us to understand, and no better than auditor can understand this better. So the first and foremost part is cash flow. No wonder lot of platform companies are suffering because there is no profits. They are having accumulated losses. The company shares will suffer. Don't touch it. Let them prove it and then come back. Somebody came and told me, sir, this company, now it's making loss for the last 3 years, sir. But next 3 years are bright. Can I buy it? I said, let them prove it. Let them do well. I am ready to pay 10 rupees more at that time than buying now and suffer. Why should I invest in a company which is not making profits, which is having huge borrowing, and visibility of profit is not there? Don't buy it. These are all very, very important. Corporate governance. It's very important. The company is not governed well. The company is not managed well. If they keep on borrowing money from the banks, not able to service the interest, not able to pay back the unsecured loans, they are having default in PF and ESI. Best is to avoid the company. As an auditor, you would have seen many companies struggling. Some companies, you know them, they have huge receivables and inventory. You'll have a problem. When somebody comes and asks me what is to be done, I'd say they're having huge 100 crores sales and 50 crores receivable. It means they are not realizing money. So those kind of things, the stock market understand better. They'll give correct valuation. So be careful about that. And diversification is very important. You can't buy only bank shares and say that banks will do well. That's why I told you buy the index, because index will have cement companies, IT companies, it'll have banks, it'll have pharma companies, it'll have automobile companies, it'll have oil and natural resource companies. So diversification means it'll have everything. When you are buying mutual fund, buy diversified mutual fund. A lot of questions come to me. Sir, in the mutual fund, should I buy large cap or mid cap or small cap? This question keeps coming. Yes, small caps can deliver great return in the short time, but the loss also can be quite high. Mid cap is a good part, but large caps are much safer. You are going from fixed deposit to equity. What is your concern? Protection of your capital. What is your intention? I want higher return than fixed deposit. How much I'm getting fixed deposit? 6%. What is the requirement now? Maybe 10%, 11%. Large cap is the best. Index funds are the second best. Why should I look at small companies where there is no liquidity? Sometimes transferability also is a problem. I'm not saying small caps are bad, but you are a conservative investor. You want to play safe. Better to play safe with the large cap. But if you're an aggressive player, do whatever you want. So be careful about what to do and what not to do. And it's very important for you to understand all this. Capital gains and dividends are taxed, but still it is tax efficient. Ability to counter inflation because your returns are in double digits. I am not saying 20%, 28%, but they are good. I'll show you how wealth can be generated. Best avenue for long term. I have only two mantras for you. One, you have to have patience and look at long term. If these two are there, you will be successful. But if you're a short-term player, and if you don't have patience, then you're in trouble. That's what is happening in the market. When I address the investors, they say, sir, I purchased some Asian paints last month, sir, at 3,200. Now it has become 3,100. What do I do? 100 rupees loss in 1 month, sir. The same rate, if it goes, my people are saying you lose 1,000 rupees in 1 year. What I can tell him? Second, whom is he consulting? How can he extrapolate the loss like this? I have no answer for any of these. I told him, come after 1 year, let us see. When Asian Paints in 1984, when they came for public issue at 32 rupees, not many takers. But today, see the company, how it has grown. One of the well-managed companies, highly profitable companies, not much debt, very well sought out products. These are all very important for you to understand. Why Maruti is going up every day? Because 50% of the cars sold in Indian market is Maruti. Will it go up? Shares will go up or go down? If I am manufacturing something nobody is buying, that means my share is useless. Maruti is having 50% market share. Will it go up? Now they're saying 10,000 rupees very high, sir. How? Maybe 30,000 it will become, who knows? So revenue and profits are the key for success for any company. If you see growth in profits, if you see corporate governance in a company, and if you see debts coming down, that means you have identified a company. But we don't care a bit about all these things. Sir, I go to market, sir, I start trading every day. What have you achieved? The other day, I remember one senior person came to me and said, sir, I'm trading every day, sir. 100 rupees, 200 rupees I make. And how much you have lost? Sir, sometimes I lose, sir, 500 rupees, 1000 rupees. You gain 100 rupees, but lose 500 rupees. No, never trade. Trading is not meant for ordinary investors. Trading is meant for seasoned professionals. And you will lose a lot of money. Because 95% of the people who are doing trading, they are losing money. Sir, can I do transaction in futures and option? That's the question they ask. As an investor, can I do it, sir? SEBI says, if you are dealing in futures and option, that means you are doing business. Your income itself is coming under business, profit or loss, not capital gain. There's no protection because you're doing business. Never deal with futures and option unless you have some exposure, expertise. No, sir, I will gain experience. By losing money, don't do that. A lot of people ask me, sir, the Ketan Parekh scam in January 2000, the Nifty was 1,595. Now, how much return it has delivered? That's why I'm putting here. Around 18,000 now. It has delivered 12%. It's a great return, index return. This is an index return in 20 years. Where else you can get such kind of returns? Why I'm showing again and again the same thing? To instill confidence in you that if you're going to stay invested, sir, who will stay invested for 22 years? You are ready to buy gold and keep it in a locker for 20 years. You are ready to buy a land in OMR Road and keep it for 20 years. But you're not ready to buy a Nifty or share for 20 years. That's the mindset we are having. Because it is transparent. In OMR Road, I don't know what is the price it is selling. I bought it for 1 crore. Maybe it is 99 lakhs or 101. I don't know. But the share I buy, next day I know what is the price. Our mindset is like that. Gold, we think, will deliver eternally. Not correct. It will not. There also you lose money. So all these things, our mental block is the reason for not investing. Many people, they come and ask me, sir, the IT people themselves, they come and tell me, sir, recession is coming, sir. So we have to get prepared. Sir, what preparation you will make for the recession? No, sir, people will lose job, people lose everything. There aren't many saving. So we should liquidate all our assets. So I told him, liquidate all your land, building, gold, and come to me. No, sir, gold and all, nothing will happen, sir. Why? Because gold will be huge demand. From where? You said recession. No, sir, recession also, gold, nothing will happen. Then what about real estate? Real estate also, it will go down, it will go up, come again. The thing is, what he means is, in the case of mutual fund, in the case of stock market, they can sell it, they can liquidate it. Whereas they cannot liquidate the real estate. Very, very wrong notion you people are following, I say. Great difficulty, I said. Don't do anything right now. We'll see in March or April when the real recession comes. Recession, even if it comes, it doesn't stay beyond 6 quarters or 7 quarters. Already we have crossed 3-4 quarters. Don't worry about it. What I'm saying is, people predict a lot of things. For some more examples I've given you. See, this is all to show you that some days market go up, Some days market come down. There's nothing to say that it's guaranteed. It's a function of the market, depending on the demand and supply. If the demand is high, if foreigners buy, if Indian institutions buy, demand is more. Thanks to COVID, I must say, the retail investors' participation is quite significant. They are investing quite robustly, but they also have a mentality to trade, but that I think they should avoid. Otherwise, Nifty is a good method of doing. Some days it will go up, 5 positive closing, above 5%, yes, above 3%, above. Very external case, once in a year it will lose 5%, one particular day. There's no reason. Today the interest rates are going up across the globe. Sometimes you will have problem. Otherwise, nothing to worry about. I always say that mutual fund is very, very important. They are pooling in money and buying shares. There are 3 ways in which you can invest in mutual fund. Altogether, there are 42 mutual fund houses in India. You can call it as Axis Mutual Fund, Birla, ICAI, DSP, Franklin Templeton, HDFC, UTI, Sundaram. You have many, 43 mutual fund houses. They have debt mutual fund, they have equity, they have hybrid. Hybrid is nothing but equity plus debt. Who can invest in debt? People who don't want to take risk, put money in debt. People who don't want to take little risk, put in hybrid. They want to take an extraordinary risk, put it in equity. Then comes the question, how long I should put? Debt, put it for 3 years. Hybrid, 3 to 5 years. Equity, 5 to 10 years. Then comes next question. What kind of return it can deliver? Debt fund can give me 6 to 7. Hybrid can give me 8 to 10. Equity can give me 12% plus. Then the question comes, sir, I've been investing for 3 years, sir. I'm not getting 12%, sir. Sometimes it takes a little longer time, but 5-year average will be 12%. It's not an assured scheme, but still it is capable of delivering. One has to wait. One has to really wait and see how things are. Very well regulated schemes as mutual funds. Most of the fund houses are located in Bombay. AMFI, Association of Mutual Funds of India, regulates mutual funds. You can buy the product directly or through distributors. There are 2 methods by which you can buy. One, direct. That means no interference of intermediary. You save the brokerage, but you should know what to buy. Can I buy anything I want? The initial stage is not possible. Please take the help of a distributor. If you become expert, then you go to direct. Otherwise, don't do that. Then the second question. What is the difference between distributor and advisor? Advisor means is registered with SEBI, regulated by SEBI. But you have to pay him money. Some money you have to negotiate and pay 0.5%, 1%, whatever he asks. It's regulated. Distributor, you need not pay any money because the commission is paid by the mutual fund house. That will also be equivalent of 0.8 or 1%. You are not paying more than 1% anymore. Nothing today. 1 lakh means you will pay about 1,000 rupees. But the important point is you have to select a scheme, you have to stay invested for long term and achieve the purpose for which you are investing. It is professionally managed. because all the people, whether it is a fund manager, the research team, operation team, the sales management team, all are professionals. It offers diversification. Suppose I go to ICAI, they will say, sir, you can buy a large cap fund, you can buy mid cap, you can buy multi cap, you can buy tax scheme, you can buy debt scheme, anything. Or I want banking scheme, pharma, anything is possible. So diversification becomes very important. Highly regulated. SEBI watches very, very closely how things are. There is a problem. If you write to them, then they will take action. Very simple to invest. Today, the click of the button, you can invest. KYC is required, but still, everything is done digitally. There is no need for you to go anywhere. Ability to switch to other scheme, possible. Distributors will help you very easily. If you tell them, please help me, sir, they will help you out. Distributors are the main people who collect money. Do you know today, Indian retail investors and others are investing close to 12,000 crores per month as systematic investment. It's unheard of. It is 12,000 crores today. Do you know in 2008, at the height of the financial crunch and the problems, the SIP figure was something like 200 crores in India. Today it is 12,000 crores. That means nearly 1.5 lakh crore is collected per year. Our equity market will not fall that easily because one, SIP 1.5 lakh crore, then PF invest some 5%, then NPS invest, then HNIs, corporates. So about 3 lakh crore or 4 lakh crore coming to the market. So we are not dependent on foreigners. Do you know foreigners have sold $30 billion worth of shares in the last 18 months. But still, the market is at 60,000. Normally, but for SIPs and other inflow, the market would have gone 20,000. There would have been 20,000 today. But luckily for us, the SIPs and other schemes are helping. No need to worry at all. So your ability to invest has become better and better. Equity as an asset class gives high returns. High return means 12%. Don't think 20, 30 and all that. Nothing. 10 to 12%, keep it as a ballpark figure. Low management cost. Maximum 2%. 1% for distribution. 1% is their management. These are all very important for you to understand. Many people don't understand mutual fund. They don't know how many schemes are there. They don't know whether it is debt or. A lot of people come to me with a bag and say, sir, my father invested money, sir. He is no more. Can you help me out to collect all the papers? And I want the money urgently. Father has invested money. He may or may not have put nominee. Now he passed away. He has not told anybody where he has invested. It's a very sad state of affairs. When you invest money, please consult your family members. Take them on board. Tell them what you're doing. It's very important for you. And pencil it down. Keep it in a file. Many people say, sir, something is there in Sundaram, they'll say. There are about 150 schemes in Sundaram. Whether it is equity, debt or hybrid, I don't know. So we have to find out all these details. That's why I said distributor is important for you. So nomination is very, very critical. Tomorrow when you go back, check whether you are given nomination for all the schemes. People don't write a will. They don't nominate anybody in the bank. They don't nominate in the insurance policies. They don't give nomination in the mutual fund. We don't care a bit about all this. We are reckless most of the time. We pay a price. We pay a price means the family goes around in circles. Very, very sorry state of affairs. This is a very important thing. Just read it, how it goes. I'm assuming 12% return. Many people can say 15, 20 and all. I don't know. If somebody asks me whether I can create 1 crore corpus, I will say it's very easy. Just put 20,000 rupees per month for 15 years. 1 crore is guaranteed. A lot of people come and ask me, sir, how can I put 5,000 rupees every month? You will be getting 75,000 per month as salary. You can't put 5,000. No, sir, I got a lot of expenses. I travel. I tell them, after getting 75,000 rupees, if you cannot put 5,000 rupees in an SIP, it means something radically wrong with you. I have got some customers who are earning 12,000 rupees per month, but put 1,000 rupees as a SIP. I value them more. Ordinary people, they come to me and say, sir, I want to invest 1,000 rupees. Can I do it? Yes, you can. Why not? I really help them out because he's saying 15 years, I'm ready to invest. I'll say 5 lakhs you get. It's a big money for him. For a person earning 12,000 rupees per month, 5 lakhs is a lot of money in 15 years. For a person getting 75,000, 5,000 is the minimum he should invest. In my opinion, if you cannot invest 5,000, it means not worth it. In fact, I'm a little bit harsh sometimes and tell them, if you cannot save money, invest money, then what is the purpose of your living and what is the purpose of your earning? Many times this question comes. So 25 years, you forget it. At least 15 years, 1 crore. Each one of you present in this seminar should be capable of 1 crore, just like, forget 2 crores. Many a times people say it's difficult. I say no, easy to do it. Many people tell me, sir, tax saving 80C, I want to put in fixed deposit for 5 years. I said, why are you putting for 5 years? 6% you're getting. Why don't you put in the equity scheme? No, sir, it's very, very risky. You don't want to take any risk. What can I do? So the first thing I tell them, put it in ELSs, equity linked savings. 3-year lock-in. I say, don't bother about lock-in, put 1 lakh every year for 15 years. Then they'll ask me, what do I get? And see, 1 lakh a year for 15 years, you keep putting at 12% return. You'll have 1 crore with you at the end of 16th, 17th year. You will not get from Provident Fund and gratuity this fund. That's what I tell you. Astonished. I feel ELS is the starting point. Everybody should contribute there. There is no risk at all. Yes, market can go up and down, doesn't matter. Don't imagine some problems and don't invest. Do you know anything about the Russian war? I don't know. Will it stop? Somebody asked me the other day in a forum, sir, Russian war, if it continues for 3 more months, what will happen? I don't know. It's going on for 6-7 months now. Another 1 year it goes, what will happen? Nothing will happen. We are getting good crude from them at a cheaper price. And you may get better minerals from them at a cheaper price. Russia is very friendly with India. That's all I know. Don't imagine problems. Don't imagine things. It's easy to imagine things. which is not in your control. What is in your control today? I have 1 lakh with me to invest. Put it in ELSS. That's all. Don't try to solve world problem. You are not Trump or Modi. We don't know. They themselves may not know sometimes what is happening. It may take another 2 years, 3 years. The Palestinian war went on for 20 years. Vietnam war went for 20 years. We don't know this Russian war, how long it will go. God knows. Do you think the economy will come to a standstill? Indian economy is robust today. The consumption of India is greatest. The next 20 years, India will be at their best. Today, Airbus factory is getting, inaugurated by our Prime Minister in Gujarat. Can you hear all these things? All the big corporations are setting up shop in India. Unheard of. And we are worried about investing in ELSS one time. Never, never. Now the question comes, should we invest now or I should invest later? That I told you the other day when that husband and wife came with 1 crore savings bank account. I said, start putting money right now. Let us start slowly but steadily. 2 ways. 1, put it in liquid fund and keep transferring into equity. 2nd, start your SIPs, the right earnest. They took notes, but the problem is they go to somebody and ask, should we do that? Then the person will say, no, this is not the right time. The Gujarat election is coming. Himachal election is coming. 24 Indian election is coming. And 2024 end American election is coming. Every month something will come. Can you wait for everything and anything? Can you keep on reacting to something? You are not doing postmortem work here. You are not a doctor. Opportunities are before us. Before it is too late, one should look at it. Only 5% of the people are investing in Indian market. The rest are investing in gold and real estate. If you look at the richest people in the world, all people who are investing in equity are richest. Take the case in India, Adani, richest man because of the shares, the business. Mukesh Ambani because of his Reliance. Premji because of Wipro. Narayan Murthy because of Infosys. You tell me one person who has put money only in gold and become rich. Difficult. That way, all India is investing in gold. Everybody should be rich people. All cannot be correct all the time. Only 5% of the people are investing in equity. Why don't you contribute and try to be part of that game? That's why very few rich people are there in India. Don't miss out golden opportunity. If you miss out, only you have to blame them, nobody else. I always say that we need not wait for somebody to tell us what is to be done. So I think I will come into the last part of it. As I said, strong SIP inflow helps liquidity. 12,000 crores are invested every month. So very, very strong. And that also equity. FII outflow from the market. Foreigners are pulling out. Nothing. High crude prices, yes. A lot of problems were there. It went to $120. Has come down to 90. Valuation is moderate. I wouldn't say cheap or expensive. Earnings showing strength, yes. Consumption is growing. Everybody wants to buy a two-wheeler. Everybody wants to own a mobile. Everybody wants to travel abroad. All the flights are full and all the hotels are full. It means the consumption is growing. All the gold shops are full. I don't know. Go to T Nagar. All the shops are full. Manufacturing is in the focus. Overall, the market is looking for a positive for long. If you take a 10-year call, 12-year call, I think we are in the best wicket today. The SIP flow of 12,000 crore, in my opinion, can go to 25,000 crore in another 5-6 years' time if more and more participation comes. Do you know the smaller rural people are investing more in the equity market today? Aurangabad sells maximum number of Benz cars in a month. In a small place in Gujarat, they are having the highest per capita income today. It is our willpower to work hard and create wealth on our own, rather than saying we cannot do it. We'll miss out in a big way to miss out. I think current market scenario looks very, very favorable to our market. So one should not delay the process. We should look at investing in a moderate way, but we should consistently invest money so that we are. There are risk factors, of course. Currency fluctuates. Now it is 83 rupees to a dollar. It used to be 75. Crude oil price can vary. Inflation across the globe, 7%, 8%, 10%. Geopolitical, yes, but it's always there. If these are not there, some other risk factor will come. We had COVID earlier. Risk factor will always be there. Don't say that all risk factors have gone. Now the time has come for investing in equity. Never happened. That time the market would have gone to 1 lakh and you will not be able to buy it. So risk factor will always be there. So I think I have completed my presentation. If you have any questions, I will be happy to answer.
Yes, sir. We can see it in chat box. Are you able to see the questions which is already compiled over this?
1 minute, 1 minute. Let me see. Okay. SIP after a stage of say 5 years gets accumulated into lump sum, then what is the necessity for SIP? We can time the market. No, you can never time the market, sir. Market timing is very difficult. So it's better to be a disciplined investor. I don't think you will be able to get a better thing because nobody knows what is the right time to invest. So SIP is the right method. It's a habit. Can you please share meeting of our Zoom? I'm unable to connect through the mobile phone. I don't know what that.
No, that's not a question, sir. Next one.
Gold as an asset class can give you cash on immediate sale. Can we keep it as an emergency? No, no, no. Never do that, sir. See, the emergency fund, I told you, keep 1 lakh or 1.5 lakhs in bank deposit or liquid fund. Why I told you? Tomorrow morning, I want money. Go to liquid fund, encash 1.5 lakhs plus whatever 4% or 3% or 5% return. Go to fixed deposit, encash it. But gold, suppose the price is cracked. It has come to 1,25,000. What will you do? So any product which are fluctuating in nature, emergency fund, no. Only fixed deposit and liquid funds are possible. Capital protection is more important than return. The common man knows the regulated or unregulated. Is there any government advertisement? Why do you want government to come here, sir? I am saying if SEBI is regulating the capital market, buy mutual fund, buy stock shares. But if some regulation is not there, why are you going and giving to somebody? Your neighbor is selling some product for 25% return. Why do you go and give it to him? Don't expect government to come to your rescue every time. What is common man here? We are all educated people. We should know where to put. Contact some good advisor. They'll help you out. Every mutual, Quant is one of the mutual fund houses. 42 fund houses are there. Everything is good. Everything is bad. Is it okay to invest in debt for long term? No, sir. 3 years, I said. Debt funds are okay as an asset allocation product. 3 to 5 years, you can put it and see how it works. Debt can be used for short term, equity for long term, wealth creation. This is a very important point you must know. Debt funds are good, but you can't create wealth out of debt because it gives you only 6% or 7% return. For wealth creation, equity. Ratio means I told you 10% is maximum you can put in gold. 10 lakhs, 1 lakh you can put it in gold. One good house to live, that's all. House can be 50 lakhs, 1 crore, 2 crore, depends on your portfolio. And 20-25% you can put it in a fixed income in the beginning stages. Then later on you take it to 50%. But equity minimum should be 20%, 28% to start with. Then you can increase it a little bit when your salary goes up. Equity alone can save you and help you out. Selecting the mutual fund is a consistency of the return, and the returns are good and consistency of the fund houses. You can definitely look at mutual funds. To begin with, if you are a new investor, I suggest go to an advisor or a distributor, or you look for value research or Morningstar ratings. But if you are a seasoned investor, go for rating and then go invest directly. There is no problem about that. But I suggest you must keep somebody to help you out in the initial stages. And definitely it will help you out to select a good fund. A lot of good funds are there in the market. Percentage of wealth to be invested in banks. That is a fixed deposit. That is a fixed income, I said. What is not required for the next 2-3 years, you can park it. But don't park for 10 years, 15 years and all that in banks, because it is not beating inflation. Understand that. Inflation is, keep inflation in mind all the time. Any other questions, sir? I think I have answered everything.
So we have some questions in this Q&A panel. I just read it out for us, sir.
Yeah, tell
Can
me.
invest for a period as low as 1 year.
You can invest for 1 year, but then you can only invest in debt fund, because equity less than 5 years, you are going to lose money. So if it is 1 year, put the money in a debt fund, and yeah, they're also a liquid fund. That's all.
And what is the reason for interest rates of fixed deposit falling when inflation rates are rising?
Normally, inflation and interest rate will go together. If inflation is 7, you will have interest rate 7.5. But in India, I don't think it will go beyond 7.25%, because they'll control the inflation. See, in the foreign countries, they were giving free subsidy. They're distributing notes. Everybody was given $1,000 in America. In UK also, they did it. That's why the inflation is very high. They're not able to control. Luckily for us in India, they did not give any free money. So we are escaping. But 6.5%, 7% is normal. But I think it will come down very soon. Yeah. This open-ended and close-ended fund, the close-ended funds are not coming now. Actually, open-ended means anytime you can go in, anytime you can go out. That is called open-ended funds. Close-end means they used to shut after 10 days and then open it after 3 years. Nowadays, SEBI is not encouraging that. Close-ended are not coming. Open-ended funds are better for you. Nowadays, only I think those funds are coming. 3 years back, I invested in Franklin debt fund and suffered the most due to Vodafone. No, I don't think you would have lost any money in Vodafone. You would not have lost anything in Franklin. They have paid back everything. Everybody has got back. Some setbacks were there in that Franklin Templeton. Very well managed fund house it is. I don't think you would have lost. In fact, they are given the highest return in the last 1 year. So I don't think you should worry at all about this.
One question in Q&A panel which says 7.5% in Canara Bank. What is your opinion on that?
The Canara Bank, yes, they are offering now interest rates, but for how long you will lock the money there? For 5 years, 3 years, 2 years? For a short term is okay, but for as I said, State Bank of India 10 years, if somebody locks the money, he'll get 14 lakhs at the end of 12 years. Whereas in say, an index or mutual funds, you get 40 lakhs. What do you want to achieve? So it depends on what is your goal. If your goal is to get only lesser returns, you go for that.
Approve approve. So there is one question on certain companies are selling product in India, but they are not listed for investors to invest. Example, Coca-Cola, Microsoft, etc.
Investing in India is possible provided the shares are listed in the stock market, either BSE or NSE. Some companies are opting for being private, so you can't do anything. In that case, you can invest through mutual fund. Some of the mutual funds are giving 15%, 20% allocation to US funds or international funds. So you can participate indirectly by participating in those mutual funds. That's a good idea to do that. What is the future of L&T funds? Nothing to worry. L&T mutual funds are taken over by HSBC. Please remember, all the mutual funds are managed by trustees. In case somebody wants to quit the mutual fund house, the owner can only pass it on to somebody else. He cannot close it. Suppose I am the owner of the mutual fund house. I can only give it to somebody else for a price and then I can exit. But the fund house per se will not close. So L&T assets are being transferred to HSBC. No need for you to worry at all. The future depends on HSBC's management, that's all. Dividend stocks like REC, yeah, so good. Your objective is to get dividends and also appreciation, IOC, REC, anything, any dividend stocks is, as long as they're consistently giving dividends, no harm in that.
Question is, we can buy Apple phone, but how can they buy Apple shares if an Apple company is not listed?
No, everything is not your choice. The Apple stocks you can buy through mutual fund houses which are investing in Apple shares, or you are allowed to invest in international funds also now. You can find a way for that also if you're a particular. But in my opinion, Indian stocks will do much better. The next 20-25 years, Indian corporates will do far superior to what they have done in the last 25 years. So we are in a great era now. Don't miss the opportunity. That's all I will say.
Those were the questions around that. Wait for 1 more minute. If there are no more questions.
What is that? Investment international stocks through mutual fund distributed as debt fund? Yes. See, taxation part as of today, yes, it is a debt fund only. You want to invest in Apple, you want to invest in international fund, but you don't want to pay tax. What can we do about it? You can't help it, sir. You can't help it. Then in that case, you invest in equity diversified fund in India and pay 10% on long-term capital gain. No problem about that. But in my opinion, you have no choice today. It's treated as debt funds and you may get the redemption after 5 days or 6 days. You have to be careful about all these things.
Those were the questions. We'll just wait if there is any question from audience, or else we'll wind up the session.
So I want to thank SIRC, the chairman and the committee members and all people who organize this program for benefit of the CA chartered accountants and the students. I hope that the program you found some value addition to whatever you know. I have not told you anything great, but from my own experience, I have shared few of my thoughts, and I wish all of you good luck. Thank you very much for this.
Thank you so much for excellent time spent in presentation and taking up all the questions on behalf of SIRC Chairman, Secretary, Office Bearers and the absence. Thank you so much for your time spent here, sir, and for your continuous support. It's been the second time you have been taking the session on investor awareness on this year, it seems so, sir. Thank you so much for your continuous support to SIRC.
Thank you, sir. Thank you very much.
Thank you.
Thank you. Bye-bye.